We are seeing zero pullbacks in this market, but more importantly, this might be the last time that you get to buy stocks in this cycle for cheap. I'm going to show you some data here that I think is very pertinent, and you should be interested in this, and you should keep your eyes and ears open, because if we get a pullback due to this data, which I will go over with you in a second, it may be the last time for this particular cycle here to grab stocks that are cheap. And yes, there are still some stocks that are cheap. The S&P 500 is trading at a 21 PE. There are stocks that are trading less than a 21 PE, some mega caps even. And we might have some opportunities left to add to those on the next pullback. My goal with this channel is to always bring you the latest up-to-date information and analyze it the best way that I can. At the end of the day, I'm not Nostradamus, but we've done a pretty good job so far throughout this entire cycle of picking up stocks near the April bottom. Now, as I've told you time and time again, I don't hide it. In full disclosure, when we got to this 5,800 level, we're still at 5,892. I did initiate a small hedge against my portfolio, but in all fairness, I said, you do not want to naked short here. This is the only reason that I'm hedging, is because I'm nervous about this level and I'm nervous about a pullback. And I have a theory as to why we didn't get a pullback yet. And it's only because I'm heavily long and have been heavily long from March and April. Is that hedge down? Yes, of course it is. But my portfolio still hit an all-time high because my hedge was only 10% of my portfolio. And I ended up buying Amazon, Meta, Google, Nvidia, Tesla, all of the stuff that I told you guys about for the last 2 months on this channel. So I want to help you again. Let's get right into it. If you look at these metrics here from the NASDAQ, now more than 24% of stocks in the NASDAQ, of the 100 stocks that are in the NASDAQ, are over a 70 RSI. And here are the metrics for up to 1 to 3 weeks later of what that means. 1 week later, only 9% of the time were stocks positive. Most of the time, we've had a pullback. And the most significant of these pullbacks was in 2020 when we had a 9% pullback. I promise I will give you some trade ideas towards the end of the video. I just want to get through this data first because it's really important, so stick with me. Now, another piece of data, something that just triggered, is another one of these breadth thrust indicators. I remember when I did about 3 weeks ago now, a video when the Zweig breadth thrust indicator was triggered, and I said that we're up 100% of the time a year later. So I do think that we will be up a year later from at that time where we were. And now we have another breadth thrust indicator, the DeGraff breadth thrust indicator with the Zweig breadth thrust indicator. Now, there has been a couple of times where we actually have hit a low before all of this green here. So if you take a look at July 2022, on the 53rd day, we actually hit a low of minus 12%. But a year later, we were up 12.5%. Also, 55% of the S&P 500 made a 20-day high. When that happens, positive returns occur almost 100% of the time. So in addition to the Zweig breadth thrust indicator that I covered 3 months ago, this is more confirmation that we will be higher, most likely a year from now. Does that mean that we won't see volatility? No, this has nothing to do with volatility. And to be honest, for those of you that didn't buy the dip, you're praying for something like this here, right? Because as I said, the next pullback, we did not get much of a pullback, and I'll tell you why that is in a second. But the next time we get a pullback, in my opinion, if you want to be long stocks, you cannot afford to miss some of the deals on some of these stocks, especially at the valuations that they are in comparison to the S&P 500 valuation. I'll get more into what stocks to buy, what stocks to look at towards the end of the video. Now, we did get a 2% pullback last week. And as I said, you want to buy on pullbacks. Is this smaller than the pullback that I thought we'd get? Yes, we do have some unresolved gaps here. We have this low here from April 30th. I did think by now we would get some sort of pullback that was more than a 2% pullback, but this pullback was definitely a buyable one. But a more important question, why haven't we seen more pullbacks? Remember in my last video what I told you guys about retail. For the second time in 5 years, retail has been on the right side of the trade. Now, why do I say this? Because we saw this during the pandemic. I also shared with you data that showed that institutions and hedge funds were actually net sellers. They were net short or net sellers of stocks. Goldman Sachs, which had a target for the S&P 500 in the beginning of the year at like 5,000, now they raised their targets magically to 6,500. And on April 25th, I said it's only a matter of time before every contributor on CNBC who said we are mostly in cash and not interested in stocks yet a week ago will magically convert to we've been long stocks since April 7th. As a matter of fact, if you tuned into CNBC, every segment was talking about how the United States was an uninvestable environment and that people were investing in China and South America and Europe. And props to the CNBC host, who I otherwise find insufferable, but he put on blast Steve Weiss, who was one of the CNBC contributors who manages a fund called Short Hills Capital Partners. He was saying how he was all cash and didn't have stocks. Now, magically, he's in stocks. Listen up.
I guess in late April, you were out of both of those names. Now you're in again.
Yeah, actually, the timing on the purchase was April 25th and May 1st. So I've been in for a few weeks. The sale of those was earlier. It was a great opportunity to make money in the market, and I did just that. So I didn't catch the rally at the beginning by any stretch, but selling them at the highs that some got back to, some didn't. And buying them back down, not the lows, but quite near, is how traders make money in the market.
Weiss, you didn't tell us about this yesterday. Why didn't you tell us about it yesterday?
I did whisper to you.
April 25th to May 1st, you bought back Amazon and NVIDIA.
Right.
Well, you whispered it to me when?
I told you while you were on set.
He said, why didn't you tell us about this yesterday? I will die on this hill, but institutions and hedge funds are just as dumb as some retail traders. The only difference is they have access to more capital. I got a question about whether this was dangerous or not, that it was retail that was leading the way initially, and I say absolutely not. Hedge funds and institutions are not smarter than you. They have more money than you, but they're not smarter than you. If they were, we wouldn't have seen hedge funds go bust after the pandemic. We wouldn't have seen retail clobber the hell out of hedge funds with the GameStop and AMC saga. We wouldn't see Cramer crying on TV because he sold Meta when it was below 100 and he was sorry that he recommended it. Now Meta's trading over 650. We wouldn't see Bill Ackman literally sell Netflix at the bottom, and Netflix ended up being a 4-figure stock. So no, I don't think that it's a danger sign that retail led the way, because the reason that we're not seeing pullbacks now, if you take a look at the likes of NVIDIA, all these names that people hated NVIDIA was trading at 87, it's now 135. When you look at the volume, it's above average volume. So retail led the way in April, buying all of these bottoms. And now it's the institutions that are piling on. If we take a look at Tesla, you could see the same thing with the volume, above average volume here, right? It was retail that led the way, buying at the bottom. And now institutions and hedge funds are piling in because they do not want to be left out of this. And that is why we are not seeing a pullback. And yes, I thought that we would see a little bit more of a pullback, and we didn't. That's fine. Did I do my job and buy stocks that I wanted at these levels? Yes. Am I 1,000,000% invested? No. I still have some cash that I would like to deploy, and I'm looking to strategically deploy it on pullbacks. And as I said, I think for this cycle, this will be the last chance to get in some stocks that are still at decent valuations, which we will talk about. One more thing I wanted to get into before we get into the stocks is if we trickle back to all-time highs, remember, we will be at 0% year to date on the S&P, meaning, your family members, your friends that are invested, that were scared to invest on the way down, or God forbid, maybe sold towards the bottom, right? They are not making money. If you were fully invested and you didn't buy anything here, you made $0 this year, because the market, just trading back to where it was to start the year, will be 0% year to date. Now, that is very much expected from the third year of a bull market. Most third years of bull markets have single-digit returns. And when we have the first 2 years of a bull market that are up over 20% it is very hard to get a third year that is double digits. So if we do trade back to 6,000, if we get to 6,100, even 6,200, we'll be between 0% year to date and 1 to 2% year to date on the S&P. But those of you who did your job and bought here, you're already up 30, 40, 50%, depending on which stocks you bought. That is why it is imperative to buy when the valuations are too ridiculous to pass up. Now, everybody's going to ask, should I buy NVIDIA? Well, NVIDIA was 87. It's now 135. And in all honesty, my answer would be it's your choice. Would I buy NVIDIA here now? No. Did I buy NVIDIA below 100? Yes. Can you buy NVIDIA on pullbacks? In my opinion, yes. If you take a look at SOXX, I showed this to you before, but SOXX was in the trend line since 2015. This is a 10-year trend line. SOXX was sitting on the trend line down in the golden pocket, just like we saw in 2022. This is a perfect right here. This is a perfect fractal. And I think SOXX, led by NVIDIA and AMD, frankly, a stock that I don't own, that I wasn't really that bullish on. I think SOXX easily gets to 260. That means these semiconductors that are in this ETF are going to lift all boats. So in this case, we're here coming up on this weekly fair value gap. What I want to see is something very similar to what we saw in 2022. We had the drop to the trend line, a rally just like now, and I want to see a pullback. And I think that those pullbacks are buyable and should be buyable, in my opinion, if you are investing. Trading, whole different story. If you want to trade with me live every day and you want to be a trader as well as an investor, click the link in the description. So not only are we seeing CapEx not being reduced by the hyperscalers, we have a whole introduction of new hyperscalers to the market in different countries. The Saudi AI chip deal is the first one. The UAE is likely going to be the next one. And these countries are just getting started. They're going to need more and more chips. And I don't know what is the deal between the US and China as it relates to semiconductors, but if a more favorable deal is struck there, imagine if the US opens the door to China to buy these chips. In my last video, I said 370 was my target in the run up to the Robotaxi event in June. We are almost there right now. No pullbacks, guys. This volume is just increasing because, in my opinion, I think institutions are dumping on top of what retail is already dumping as well. So we're seeing this insane spike. I don't think we are going to stop at 370. As a matter of fact, I think we can make new highs on Tesla, especially if what it reports is credible to the market, right? If we are actually seeing people taking rides in Teslas, that will be a sort of realism that the market just hasn't seen from Tesla in a very long time. But in my opinion, Tesla is going to continue to be volatile. I think it will likely get to 400, if not all-time highs. And I do think that it will suffer its similar decline thereafter. Now, one opportunity that I think is actually undervalued is Google. And I talked about this. And the funny thing with Google is it is up 14% from when I made a video about it to buy it in the 140s, right? Currently trading at 165. But Google is marred by a lot of fear. Now, this one could actually be not only a stock play, but an options play. So if you look at Google, we had this consolidation here at around the 165 range. Support, consolidation, resistance. This right here is also the fear candle. This is when that report supposedly came out that Google searches were dropping on iOS devices, something that I think is extremely trivial and doesn't matter. We already knew Apple Intelligence was coming out. Apple's phones are already coordinating with ChatGPT to display results. Like it was nothing new. And this fear candle just took us back down to this trend line here. And you can see that we've traded inside of it. And today we finally closed above that fear candle. So I'm looking for a breakout and a retest of this 165 level. And I will likely buy calls on Google once again. Another thing that's important is that Google's PE ratio, forward PE ratio 16. This is the cheapest in all of the Mag 7. In my opinion, the antitrust is BS. The fear from ChatGPT, search is growing exponentially on Google. They're spending a ton of money on AI. They've been around for 30 years. Google is going to figure it out. They are printing money. $132 billion in operating cash flow. Just like when Meta was in the dumps and the market rediscovered Meta's ability to print cash, same thing is going to happen to Google, in my honest opinion. Plus, these money managers, they're looking for places to put money. And that is why you were seeing Google pump here, in my opinion, right? Because all these other stocks that they missed are now pumping towards their all-time highs. Google is the last one of the Mag 7. And I think if we break out of 165, there is an opportunity to buy month-long or 2-month-long 170 calls on Google. Obviously, the shares are also, in my opinion, undervalued. I mean, this company is generating $203 billion in gross profit. Its margins are so low, $100 billion in net income. Like I said, $132 billion in cash. They generate more cash than most countries. Now, another name that I'm looking at, XLV. XLV is the healthcare sector of the S&P 500. This sector does not lose. Why? Because healthcare is considered defensive. And if we get some uncertainty in the future, because remember, I don't think we're out of the woods in terms of a recession due to the fact where yields are. But if you look at this, this is the trend line since 2010 on XLV. And I'm looking at this level here in the low 120s. And if you're wondering what's in XLV, it's all the beaten up healthcare stocks. Eli Lilly, Johnson & Johnson, AbbVie, United Health, completely taking a beating. So these are some of the biggest healthcare companies in the world. And everyone and their mom is asking me about United Healthcare. So in my opinion, I don't really want to buy United Healthcare in isolation. I do want to buy the sector. To me, this is a stock just like Waste Management, right? It's a defensive stock. It only goes up because it is an absolutely needed service in our economy. Another stock which we bought, and I'm up actually 40% on this, is HIMS. Now, HIMS, obviously, in terms of price, it is back to the highs that we saw in February. But if you're just looking at the chart, yes, it looks overvalued or whatever that means. But if we take a look under the hood, HIMS is actually only worth $14 billion right now. Now, it does seem overvalued, but if you take a look at its growth rate, right, is it growing into its valuation, or can it grow into its valuation? And the answer is absolutely yes. Its revenues in the last 3 years went from 26 million to 82 to 148 to 500 million to 1.4 billion to 1.7 billion. So can the company 2x or 3x within the next couple of years? Yes, absolutely. I think HIMS can trade close to a $50 billion market cap based on its growth rate currently. A $50 billion market cap is about 3.5x from here. So I would look for serious pullbacks on this stock to buy it. You guys know how I feel about ASML, absolute monopoly. Not going to go over it in detail, but I think ASML is, again, forming the same exact fractal that we saw in 2022. And even if you look at this pattern here, you could see ASML bouncing off of that trend line, trickling higher, and eventually will pull back. And I think that ASML is a pickup on pullbacks. I own a lot of it, but I think eventually ASML trickles back to the $1,000 mark. You guys know my stance on Meta. Unfortunately, no pullbacks here, but I think Meta is easily going to all-time highs. I don't think that anybody questions that. All that is to say, based on the breadth thrust indicator, the fact that smart money is smart money, they're actually the dumb money, is now joining the retail trade. The fact that tariffs are, you could see the administration completely shifting, trying to bolster U.S. business, not only in the Middle East, but now we have this 90-day, not even a pause, but a 90-day reprieve on the high tariffs with China. You could see that deal being worked out. That potential voluntary recession that was likely going to come by the summer, I don't think that that's there. And if we do get a pullback here, within the next week or two, If you want to join this trade, you better pull the trigger, because in my opinion, that will be the last time for this cycle here. Are we going to get another bear market and at some point down the road? Yes, especially because yields are still rising and the administration has not found a way to deal with this. This is actually something that is probably beating in their chest right now. If the Fed doesn't cut, there's really no easy way to deal with this, to be honest, unless the Treasury goes on a buyback spree. But they've never really purchased as many treasuries as the Fed has. So there's really no easy way to deal with this. And this is why I said it's a game of chicken between the economy and the Fed. Now, this could be months from now. It could be a shallow recession. The Fed may decide to cut now that inflation looks like it is subdued and tariffs aren't as bad as they were a week ago. But something needs to happen here because these yields are completely out of control. And for those of you that laugh when I say life-changing opportunity, there's only a few of you. I mean, it truly is a life-changing opportunity on some of these stocks. Like, wouldn't you love to go back in time and buy Nvidia at 88 now that it's 135? Some of these stocks are up 40, 50%. That is life-changing. Where are you going to make 40, 50% on your money? That is why I say life-changing opportunity, even though some of you find it funny. I guess the thumbnails and titles are kind of funny. I agree. But anyway, traders, that is it for this video. If you want to trade with me live every day, link is in the description below. If all you care about is long-term stock analysis and long-term stock picks, there is a much more affordable rate for membership below as well. But you don't get to trade with me live every day. If that's what you want, that's perfectly fine. Leave this a big fat thumbs up. Let me know what you think. Do you think the market's going back to all-time highs? Do you think all of these stocks, Nvidia, Tesla, Microsoft, Meta, do you think they're going back to all-time highs? Do you think this is one big, huge bull trap before we all get rugged? Would love to hear from you. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.